Hey, it's Ben from Hooski.com with today's mini mortgage tip. So today it's 5 things to avoid when getting a mortgage. Number 1, avoid paying a fee. So there are advisors out there and advice services that still don't charge a fee to get you a mortgage. So at Hooski.com, for example, the way we get paid is if we do a mortgage for you and arrange a mortgage and it completes, we get paid on a commission basis via the lender that the mortgage is completed with. So that doesn't come out of your pocket in any way. So where possible, try and use people who don't charge a fee. Number 2, avoid multiple decision in principles. These might be called several different things. So it might be a mortgage in principle, a decision in principle, an agreement in principle. They're all the same thing. So avoid getting several of these because each time you do one of these, it will likely negatively affect your credit score ever so slightly. So doing one and then doing the second one might fail as a consequence of having that footprint on your credit file from doing the first one. Now there are some lenders out there that will do a soft footprint on your credit file, which means only they can see it and you can see it and no other bank can. So it might be worth in certain circumstances asking your advisor, to get you a bank that does a soft footprint for the purposes of a mortgage in principle. Number 3, get several sources of advice. So I'm all for going down the pub and getting the advice from the bloke standing at the bar who's just had 6 pints, or from my grandparents, but lenders are constantly changing their criteria and changing the goalposts of how easy or hard it is to get a mortgage. So even if someone you know has got a mortgage 3 months ago, for example, with a bank, that bank might have changed their criteria completely from them. And so that might not be available anymore. So you need to seek independent advice from an independent advice service. They will give you exact up-to-date criteria that is right on the day that you want to get a mortgage. Number 4, don't take out any loans or credit cards around the time of you applying for a mortgage or even just after you've applied for the mortgage. Wait until the mortgage is started, or as you call it, the mortgage is completed. So like with a mortgage in principle, when you take out a loan or credit card, the place that's done it will likely run a credit check on you, which can negatively affect your credit score and therefore negatively affect your chances of getting a mortgage. So it's not worth the risk. Just wait until after the mortgage is started and then get your loan or credit card if you still need it. Number 5, don't forget to check your credit score. There might be a missed payment on there that's not supposed to be there. It wouldn't be the first time that has happened. So if that's the case, you're not putting in a mortgage and being surprised because there's missed payments showing on your credit file. You can get it sorted and get it removed from there before the mortgage is started. If there's a missed payment on there and it's meant to be there, but you didn't know about it, at least then you know where you stand and you know how you can improve it and you know what you can get. So that's it from me today. Thanks very much. Bye.